Everybody, welcome back to another CYT-Crypto episode. My name's Stephen Aitchison, and today I want to talk about a trading indicator that I think works really well. And it works for trading, or it works if you're looking to get in on a position but you don't quite know when to get in. And so it's looking if you're looking to accumulate, and if you're looking to sell at a certain point or accumulate at a certain point, you can use this indicator, and it's a brilliant indicator. Now you can use it in multiple kind of charts on multiple time frames. The daily and the 4 hourly I think work really well, or you can use 12 hourly, 8 hourly, 6 hourly. I like the 4 hourly or the daily. The daily works really well. So I put this chart out yesterday on Twitter for Aleph Zero with the Fibonacci retracement levels as well going up the way, or the Fibonacci extensions going up, and I talked about the crossovers, which has just happened again. So I've been talking about those three crossovers for the last couple of weeks. Just now, the first one happened here at $1.20, went all the way up, didn't cross down to the downside until about 229, which is a brilliant, nearly 100% move, a 90% move that you could have got in. So first of all, what exactly is it? It's the 7 EMA and the 21 EMA. That's the exponential moving average. Now, to let you understand moving averages, what they do, if you're looking at a simple moving average or a moving average, if you've got, say for example, a 21-day moving average, what it does, it takes the close price of 21 days, adds them all together and divides by 21. That's a simple moving average. That's what that does. Just a normal moving average. That's what you see in the 50 EMA or the 50 MA and the 200 MA. So it collects all the data and divides it by the number. So the 7 EMA differs very slightly in that it doesn't add all the numbers up together and divide by 7. It gives more weight to the latter numbers or the latter kind of prices. So instead of dividing it by 7, it'll give more weight to the previous day's price. So it's a wee bit faster moving than the MA. So that's why I like using it. So that's what the exponential moving average is. Roughly, that's kind of what it is. So when you've got crossover, that's an indication for me that there's a trend reversal. Now, this does not work when things are moving sideways, and you can see here, we'll zoom out. So from about 19th of March to around about 24th of March, 25th of March, or even later than that, we kind of Aleph Zero was just moving sideways. On the 4 hourly chart, it was just moving sideways, and we were in and out of this crossover. So it doesn't work when it's moving sideways. So you might be in, you might be out, you might be in, you might be out, but you can catch a big move like this one. If you caught it at $1.20 and moved all the way up to $2.79, that's a 150% move if you manage to get out here. And this is where other indicators come into their own after looking at the fib retracement as well. So this catches the trend reversal, but as I said, it doesn't work in a sideways movement, and you never know if it's going to go sideways for any length of time until it's going sideways. But you can still catch a move here if you're in and out and you're paying attention. So we had a move to the downside for Aleph Zero. Here, probably around about here at $2.20, and it moved to $2 or $1.98 was the bottom, and then it started moving back up, and it crossed over here just yesterday at $2.36. That'd have been a good move to get in. Now, you can see here that when it crosses over, the point here that it crosses to the downside is $2.32, but you have to wait on a confirmation candle. So because usually what happens, because this is a lagging indicator, usually what happens, the 7 EMA will start to look as if it's crossing over on the day that you're doing it, or on that 4 hour period that you're doing it, but then some things might change, it starts going up again, and this will just upturn and keep on above the 21 EMA. So you wouldn't have got this. You have to wait on that confirmation candle, which is here, and that you wouldn't have got out until $2.15 or something like that. And same with this one as well. You won't really get in until about $2.35 when that happened on the crossover. But it's now at $2.47 just now. So this could be a big move, but we don't know yet. It could go sideways from here and just start to go in and out. But with the things that are coming up for Aleph Zero, I think this could be the start of a big move up and back into price discovery mode here where it was before. So went into price discovery mode at $1.89, hit the $2.56, which is a Fibonacci retracement level at 1.618. So that would have been a good indicator to get out round about there. And It came all the way back down to retrace, to retest the $1.89 and then go back up again. So it's now going to test at $2.56. Once it gets past that and it stays above that on the 4 hourly, that's a good indicator that things are going to start to move again. And we're going to price probably going to about $3.64 for the next kind of level of resistance. So I think that's what's going to happen here with the Aleph Zero. So, but explains extremely well the 721 EMA crossover works, because a few people were asking about it on Twitter when I spoke about it. So we'll just go along here. This is on the 4 hourly. We can change to the daily. It's not going to give you as much data on the daily, but if we change to the daily, see what happens. It's still crossed over to $1.20. You'd have probably waited on the confirmation candle around about $1.32. But if you use this on the daily, you'd still be in this trade just now. So the longer term time frames, there's less stress involved in it. If you're using it on a 15-minute, you're kind of having to look at the charts all the time, which I did for a while a couple of years ago when I was day trading. You have to look at the charts all the time, and it's pretty nerve-wracking. Your nerves just get shattered. But if you're doing it on a longer time frame, like the daily or the weekly, and we can look at other charts for that, then you pretty much get in when there's a confirmation candle. So you'd have got confirmed here around about $1, say 40. It'd have been, well, actually here, $1.35. You'd have got confirmed there, and you'd have just stayed in until you've seen a big kind of downslide. So if you're in it for the longer term, you say, okay, this is a good time to get in, and this is why the 7 EMA and the 21 EMA crossover is so good. It gives you a chance to get in. Conversely, it gives you a chance to get out. If you want to accumulate more, for example, and you say, okay, this is going, it's moving down. Just now, I want to accumulate more, but when is a good time? So you'd wait on it going down. You've not really got an example here. So you'd wait on it coming down, going down, and then go back to the upside. When it goes to the upside, that's the time to accumulate more as well. So that's for the Aleph Zero. If we go to, we'll look at Terra Luna, and we'll do it on the daily as well. And we can see that's been on a tear, and you'd think you'd just get in and it wouldn't be in and out much, but it is on the daily. You've got a lot of volatility with Terra Luna there because there's been volatility in the markets. So it's not quite as easy as just getting in and forgetting about it. But with Terra Luna, you could have caught a break here, 23rd of July, 2021, say on a confirmation candle up a bit, $7.50. And you could have caught a move up to 32 on the confirmation candle, probably about $27. That's a big move. If you got in and out, that's a 300% move. So that's one example, but you can see here it's in and out quite a lot on the way up. Even on the daily, you're in and out, but you could have caught another one here. Confirmation candle would have been about $50, and on the downside, about $71. So you've got a 50% move. At the very beginning, you could have caught a huge move on Terra Luna on the daily from 32 cents, just left it until it went to the downside again at 17 cents, or $17, sorry. And that's a huge move of 5,000%, which is a 50x. Put $10,000 in, and you got $500,000 back. And that's when you would get out there at $17 and wait for the next opportunity to get in. But as I said, when it's moving sideways, it's not a good indicator. Let's look at Terra Luna on a weekly, see what happens with the EMA on the weekly. So we can see here, we had a crossover on the weekly at 52 cents, went all the way up and didn't cross back down until $5. So that's a 10x, that's 1,000%. So that's the first one. The next crossover is at $13. And if you'd gone at $13, you'd still be in the trade just now. And at $13, we're talking another 700% move. So that's pretty amazing, that as well. But that's on the weekly. And you can see Terra Luna has had a 38,000% kind of move. So you're going to miss a lot if you're doing it on the longer time frames like the weekly and the monthly. So it is good for trading, but is better used in conjunction with other indicators like supports and resistances. If we look at kind of Bitcoin, for example, you can see it looks as if we're coming down. For the 7 EMA to cross down over the 21 EMA on the downside, but you cannot anticipate it. And this was what I was talking about earlier. you have to wait on the confirmation candle. So we're not going to get a confirmation candle until tomorrow or the day after. It just depends on what happens today, because it's not closed today. It looks as if it's going to cross to the downside, but it's not done it yet. Here, cross to the upside at 41,000. You could have got out at 48,000, but how do you know when the top is? Well, this is where you look at your supports and resistances, and if we do that, we can see we had resistance here, historical resistance. We can see resistance here, going back, so you'd say, okay, there's a resistance here at 48,000, you could get out there, or if it broke through that, you'd say, okay, I'm getting out at 50,000, because that's definitely a strong resistance before it moves up to kind of local highs. So this is where the 721 EMA crossing really comes into its own when you use it in conjunction with just supports and resistances. And that's how easy you could kind of use this. That's how easy TA could be. And that's all I use. I use the traffic lights, which is red line, which is strong support, amber line, which is support resistance, and you've got your green line, which is your kind of local highs. This is what we're kind of, that's all I use, traffic lights, and I use the crossovers as well, and a couple of other things like triangles. I love the triangles as well. But if you're just starting out in TA, just look at your supports and resistances, crossovers, and you could trade on that alone. Now, a lot of people are going to decry this and say you can't do it. You can. I've done it in the past when I was day trading. I don't day trade now because I'm looking for projects like Aleph Zero to get in on and just stay in, because day trading is really stressful. You can lose a lot of money as well if something big happens and you're not there to look at it. You can lose a hell of a lot of money, especially if you're leveraging or leverage trading, which I would not advise at all. But this is what I'm looking at just now, and this is why we've got CYT Blockchain Ventures as well, where we can get allocations for projects that are just coming out, and we've got some coming up soon. So this is why I like Aleph Zero. I still think it could go to $100 from here, relatively easy, which is a 40x from here, looking at the Fibonacci kind of extensions. But I've made videos on why it could go to $100, 154, or even 240. So it's looking good, and I just want to explain the 7 EMA or the 721 EMA crossover. Okay, until next time, namaste, take care, bye now.